Hi there, welcome to our next video in our CRMBC video series. That's the California Restaurant Mutual Benefit Corp. My name is Kaya Stanley, and I'm the CEO and board chair for CRMBC. And I'm joined again with Mike McDonough, who is the principal of McDonough Insurance. He is also our broker liaison for CRMBC and the author of the book, The Employer's Guide to Workers' Compensation. Welcome, Mike.
Thank you, Kay. I'm glad to be here today. And there's nothing more important than talking about the why.
Exactly. So today, this video, we're going to talk about the shift that needs to take place in a restaurant owner's mind to be able to get their head around self-insurance. You're really good at your business when you're a restaurant owner. There's so many things to take into account. You have to know your food costs. You have to know your menu. You have to know how to deal with your labor. All of these different aspects that sometimes it's hard to think about putting focus on workers' compensation until it becomes painful, until your rates skyrocket or something else happens where it's something that you can't ignore. And so what we want to talk about today is this mindset shift, the unknown. Sometimes when we're used to being in traditional insurance, because we've all are familiar with traditional insurance, going to something like self-insurance can seem scary. And we're going to talk about that a lot today. So Mike, why don't you start the conversation, and then we'll start talking about that.
Okay, great, Kay. I deal with a lot of restaurant owners. And the ones that are in the CRMBC and the ones that aren't, I mean, it's just like, what needs to happen? So there's 126 current members. Am I correct?
Individual members, and then we've got over 350 locations.
Right, but 126 members. So what do these 126 know that the rest of the restaurant owners don't know? And it's not really so much of a learning curve. The insurance works the same way in the sense that you pool your money and claims are paid and so forth. The biggest difference is for a restaurant owner to understand is that if you have good claims years, you're going to be rewarded, where in your current situation, you're paying a bunch of strangers that aren't rewarding you when you're having good years. All I do know is that they penalize you when you have bad years. And so in self-insurance, we're not here to penalize anybody. And so what I would like to know from a broker standpoint is, what questions do you have? What fears do you have? What unknowns can we make to be known, or provide some level of certainty that you could make the best decision for your restaurant? Because I can tell you hands down, I've been representing this group since it started in 2004. And every member that has been in there that I've put into the group, they have remained in the group. And the reason why they do that is because they have the control, and they have historically saved a lot more money than the traditional market. But more importantly, they like being part of a group of other like-minded restaurant owners. So what can we do to answer questions to give you a little bit more certainty where you would seriously consider joining the CRMBC? Because in reality, this is the best opportunity if you want to control your workers' comp.
And one of the things that I always go to when I think about this, there's a reason why the largest companies self-insure. And I'm talking, Walmart, Home Depot, Disney, companies like that. They self-insure for a reason, because it is one of the most financially lucrative business models that exist. And they have figured out that it makes more sense to keep their own money and to pay their own claims. And it doesn't mean that they necessarily are just paying their own claims out of their own office. Usually you're hiring a third-party administrator, just like we are. You are hiring people, and you have excess insurance that if there's a catastrophic claim, it's covering it. So it's not as scary as it sounds. There are mechanisms and controls in place, but there's a reason that they do that. And as companies become more business savvy, most of the time they switch to self-insurance. There's a reason for that. So even if you don't understand everything from the beginning, Self-insured groups are the logical next step because there's more of a safety net there as opposed to just going to standalone self-insured. So self-insured groups is the mechanism, the stepping stone where smaller and mid-sized businesses can get the same benefits as the huge businesses by of self-insuring. But it's how to get that leap, how to take that leap from traditional, what they're comfortable with, and even captives. I think a lot of people are more understanding of captives, even though they don't understand that there's more benefits in a self-insured group. So it's switching to that unknown, really.
It is switching, and so maybe a lot of people don't know this, but I am a chef and also an ex-restaurateur. And I remember back in, let's say, 2005 when they had the heat wave in Florida. And a case of tomatoes went up to like $48 when they were normally, I think, about $12 or $14. And so that's an assessment on produce, isn't it? And so, but my point is that I was watching my food costs, my alcohol costs, the cost of meat, produce, my labor costs. Every day I was looking at my cost. And so to those restaurant owners out there right now that are doing the same thing, and you have these POS systems and they're controlling all the inventory and how much is being spent each day and how much money you're bringing in and what are the expenses. Those are all important. But one thing we don't do is we don't do that with our workers' comp. We have a broker, we have payroll, we're given a premium, and yet we send off a suitcase of, let's say, $80,000 to $100,000 to a group of strangers that are going to spend it the way they see best, as not necessarily in my best interest. So if you can't sit there and audit your insurance company as far as where your money's being spent, how much it's being spent, what law firms are they using, what medical facilities, all these expenditures, then if you want total control of your costs, then I strongly suggest you look at self-insurance, because that's exactly what it's going to give you. You'll be able to talk to the administrator, you can get to the board of directors, whatever information you need to see as far as what's going on in the group, your loss ratios, how you can improve, requiring loss control, whatever you need to be. But why be with a bunch of strangers where you can't control that cost? You're watching all your costs in your business, but the one that you're not auditing and monitoring is your workers' comp. And I'd like to help business owners improve that. And one way you do that is by joining a self-insured group.
And CRMBC in particular offers a ton of resources for restaurant owners who either don't understand it or are on the fence. We have an extremely engaged board who will meet with and have met with prospective members, and you meet with the brokers, and we provide, between this video series and Mike's book, which is now available as a free download on our website, crmbc.com. That's one of the benefits of a self-insured group. It's also kind of a club. There's camaraderie. This is where at board meetings and annual meetings, we're sharing best practices, not just around workers' comp, and we have some of the best operators in the state of California and successful operators, which also I keep saying, there's a reason why they do that. Once you are that sophisticated and you're looking at things like that, that success leaves clues. And joining a group like this, you get much more than just the hard benefits of being self-insured, but you're in this kind of elite club of sophisticated restaurant owners that, share all of these best practices, one of which is the claims management and claims review process that you really have spearheaded for us and really turned it into a robust part of our practice that just doesn't exist in the traditional market. It's really an apples to oranges comparison.
Right. And, I'd like to just ask you a question, and if you're willing to share, but now that you're the chairman of the board, okay, why don't you just share without getting, without getting into the weeds, is what you're all discussing with the other restaurant owners that are on the board, how you're trying to improve and make it better for those that are joining or considering joining, so that we can make it a better, even a experience and opportunity for them. So do you mind sharing that for a little bit?
Yeah, absolutely. It's been really eye-opening because we really weren't focused on growing the board for many years, or not growing the board, growing the group for many years. We were just going strong. We were more interested in our financials and making sure that we were shoring up the group. So we weren't looking at growing. So it's kind of a newer phenomenon when we're looking at growing, and we're looking at members who, for example, we had a member that just had a 30% jump in their rate on the traditional market and came into us, and we were able to deep dive into what's really going on, where we are able to listen to them and see what's going on and look at their losses and look at their safety program. And we as a board and the underwriters looked at it and determined that this is a good risk. That 30% jump probably was not accurate, probably is not what it needed to be. But that's an example of something that just doesn't happen in a traditional market. The other thing that just happened recently was when we were talking about the reviews, the claims reviews. This is something that we do specifically in CRMBC, where quarterly, and it can be more often if a member wants it to be more often, we bring together the board members, we bring together the administrator, the third-party administrator, the claims adjuster, the lawyer, the legal team, and we actually are deep diving into claims. When does that ever happen? Because with that level of transparency, we can look and say, okay, this particular claim looked like it was going off the rails and it was going to be settled for hundreds of thousands of dollars. But once the member got involved, we were able to say, no, we need, we need surveillance over this one, and this is not what happened. And we were able to deal with fraud. Sometimes we've had fraud from an injured member or from a medical provider. And we're able to get control. Those are the kind of things that we're talking about that really help a member, deal with something that's unknown and all of a sudden take advantage of so many different aspects that they didn't even know were available at their fingertips.
Yeah, and that's the most important thing, is we can look at each member or potential member one-on-one. And like you said, deep dive into that member, their history and so forth, and make a determination of where we could put their rates based upon the other members in the group, based upon the similar loss ratios or better loss ratios. And so that's really what we're trying to do, is match each member up. But it's really about, a one-on-one, like you said. You look at each case, and you don't get that with a traditional carrier. And it's just unfortunate. But I just strongly believe that the SIG is the best opportunity for any employer.
And some of the things like best practices that we've talked about are, I mentioned it in another video. There was, we had a fast food franchise that had a shooting and a burglary, and one of the other members recommended to that owner, get them into massages, get a therapist in there, a trauma therapist, get all these things in there. And we ended up with no claims from that, because we took care of those workers to such an extent that they were cared for ongoing, just voluntarily ongoing. We made sure that they were actually literally taken care of. That's just an example of some of the best practices that we share. Simple things like shoes for crews, non-slip shoes, safety measures that are taken in the business that you'd think that you learn all that from, if you're a franchisee, from your franchisor, or from, different loss and safety training, but they share best practices in every single meeting and all of the different information that we share. That's just one of the side benefits that comes from joining a self-insured group like CRMBC.
Yeah, and I agree with everything. And it's really about the value and the services, but more importantly, why be part of millions and millions of other business owners when you can be part of a smaller group of less than 200 that are working towards the same common goal, to reduce expenses and improve your bottom line? I mean, there's no better product to do that than through the CRMBC.
Thank you so much, Mike. This is all the time we have for this video, and we will see you on the next video. Thank you for your time today.
Thank you, Kay. Have a great day. Thank you.
You too. Thank you.